Thank you so much. Really appreciate it. Thank you, everybody, for being here. So today, I wanted to do something a little bit different rather than, talk about the four-part test and the really dry law of things and really get down to the nitty-gritty and help you walk away with some additional tools to really help your clients and help you as the preeminent consultants you are. First off, in BRAYN, I wanted to talk about why. Why BRAYN? I want to talk about our why for a little bit. I want to talk about, personally, and also us as consultants, our why. So BRAYN Consulting, a lot of people, if you look at the name BRAYN, people say, is that Brian? Is that really BRAYN with the what? Did you misspell BRAYN? No, I didn't misspell it. There's actually a good story behind it. So way back when, about 9 years ago, sitting with my family at a Mexican restaurant, we were trying to come up with a name for the company. We're in a brain industry, and I wanted the name to be, bigger, not a family name, something bigger than that, something that transcends me and really represents not only the organization, but our clients in the industry. So it really made sense. My daughter actually came up with the idea. She was 12 at the time. And so she always, has to needle me on that. So I always make sure to give her credit. But the why, I think, is particularly brilliant because for our clients, that's the question they ask. And that really should be the question we always ask as well. Why? For example, client may be coming up with new ways to do things. So why are we doing this way? What can we be doing better? The same things. What is our why? At BRAYN, we serve small to mid-sized clients. We love it. We love the industry. We love the clients. And also, what's your why? Why are we all here today? It's because it's in Vegas? Probably a little bit, but you guys are coming from all over. You're coming from Oregon. You guys are coming from Miami. Met people in D.C., New York, Pennsylvania, all over the place. And why are we all here? CPE? Probably a little of that, but also we're here, I think I speak for all of you guys, because we want to be the preeminent professionals. We want to be equipped. When we go see our clients and we check their pulse, how are they doing this year? We're looking at their files. We're looking, whether we're an audit or tax. We want to bring the best value we can to our clients every year. So a show of hands of how many people are from the audit side here? Perfect. Tax side, is that everybody else? Okay, great. So that's a little bit about why. Why are we not taking the R&D tax credits? In my experience, at least 50% of the clients that I come across that are eligible to take the R&D tax credit are not taking it. It's for a number of reasons. It could be because, and they're usually myths of why they're not taking it. So we're going to be talking about some of those myths here. And what you're seeing right here, this really breaks down. This lays the foundation for most myths in the R&D tax credit world. The R&D tax credit is almost 40 years old. So if you think of it like a 40-year-old man or woman, the first 20-something years, that was a little bit of, touch and go time. Think back to your 20s and, being in a sorority or fraternity in college. How dependable were we, right? Could we be dependent on to go do something and, maintain a job and all of that? Probably not near as much as now. So, you think about that. When most people hear horror stories about the R&D tax credit, it's from that gray area, if you look over there. It was very tough to take it, very tough rules, very restrictive rules, almost had to be at the level of patentability to be able to take the credit in those early years, and a lot more IRS scrutiny. So you think about also a person, think about yourselves as you grew up, married maybe, had children. Well, the same thing, the R&D tax credit's the same way. Think of it as, married with children. He has a child now, the payroll tax credit. So it's very stable now, very predictable. And that's really one of the things we're going to talk about. So, really combating the myths out there of the R&D tax credit. Let's see. So, in those early years, very tough to take it. Now, what's happened over the last 15 years of the life? Most importantly, Anybody have any ideas about what's the most important tax changes that have happened in R&D? Yes. That is a great point. She said it doesn't have to be new to the world, just new to your business. That is a great point. And so really that happens right between the gray and the blue there. There was a case called the Eustace case way back then, and that's what the tax court said is it had to be new to the world. It had to be a discovery test. Almost like I think someone might even actually use the quote from Star Trek, "Go where no man has gone before." So we joked in the R&D industry, we called it the Star Trek test or discovery test, but that is no more. So around 2003, the reg changes came about, and so now we actually have, as she mentioned, not only it doesn't have to necessarily be new to the world. If it is, that's great, but just new to your company. So as long as you're doing something technically challenging, you have a process of experimentation going forward for your company, that's great. That's all it takes. Well, that's part of it. But so it doesn't have to reach that level of novelty or patentability anymore. If it does, it's great. But again, it can apply to your company even if it's just something new. So that's a really good point. Another big one is now the tax credit is permanent. That's a huge thing. Every year in the past, it was always one of those hold your breath things where, there was always 40-something extenders, and Congress is always battling it out and using that as leverage. But it's beloved on both sides of the tracks and Capitol Hill. And so it's now permanent. They've expanded it to include the payroll tax credit. So if you've got a company, and we'll talk about small companies that are essentially 5 years old or less, even if they're not in a taxable situation, as long as they have FICA taxes, you can offset up to $250,000 a year in FICA taxes with qualifying research credits. So a lot of big improvements. Improved calculation methodologies have come about. Just so many taxpayer favorable things, cases, regulations that really define R&D and improve our understanding of what R&D is. So at the end of the day, just remember, think of it as a 40-year-old person. Less stable in the college years and teen years, much more stable now, married with children. Very stable, dependable, predictable. Something that you definitely want to think about with your clients as you're asking the question, why? Another myth is that what we do does not qualify. So most people think we're not a research company, right? We're not Los Alamos Laboratories. We're not doing, the traditional definition, white lab coats, graduated cylinders. We don't have any crazy-haired Dr. Browns here from Back to the Future. There's no time machine. We're not coming up with new ways to come up with molecular fusion or anything like that. It doesn't have to be to that area. We have, for instance, over 65 industries where these companies take the credit. Obviously, the biggest one's going to be in software. But even there, it doesn't have to be a traditional software company. Think about ad tech companies. Think about fintech. Think about financial institutions, even healthcare institutions, coming up with new and improved ways to transmit electronic healthcare records while protecting HIPAA. And now we also have the new law in Europe, the GDPR, I guess it is. There's protecting information is very important. And so one of the things is if you guys, for instance, have financial clients or healthcare clients on the software side, if you see in their wages, you have a bunch of developers. Why? What are you doing? So just it's a good idea to ask those questions, be on the lookout for that. Another one, as we just mentioned, somebody may say, we're just a small company. And we've got a great example of a small company and how meaningful those credits can be. So small companies, as I mentioned, if you are a company 5 years old or less and you have less than $5 million a year in gross receipts, even if you're net operating losses, you can take advantage of the credit via the payroll tax credit. So it's a great opportunity. If you've got FICA taxes, it's something to consider and to discuss. Do we have any, are we going to wait to the end for a Q&A or, okay. And then, you know, another one, this is a big one. The process to get the credit is too exhaustive. We've heard horror stories. It's really just been a boondoggle to get the information, and it's just been a real big hassle. So I would say it certainly doesn't have to be. Find a consultant out there, interview consultants that are very competent in that industry. Ask them really, how much time is it going to take us as a firm, as a CPA firm? How much time is it going to take our clients? And, you know, how does this work? Does that CPA or does that consulting firm align with our CPA firm as far as our timelines? Or are they going to give us the numbers on September 14th and expect us to, you know, work magic last minute? So I would say start early. This is certainly a myth. It doesn't have to be exhaustive. Find a competent consultant that works with you and your client and start early. And, you know, that way when you start early, you don't have to rush things and you won't leave good money on the table. Just full exploration. Yes, sir?
Can you amend prior payroll tax filings?
That's a great question. So, to my knowledge, I don't know the answer to that, but I have been told by payroll tax companies that they would just file a new 941, and there is a vehicle to claim, you know, at that level. So the Form 941 has several options to look at there. So I'm certainly not a payroll tax expert. I'm more on the income tax side, but that's what I've heard from payroll tax companies for the R&D credit. So great question. Yes.
What's your opinion on amending income tax returns for the credit?
Great question. So she asked, what is my opinion on amending income tax returns? And so to clarify, are you going towards like audit risk or availability? Okay. I like where her head's at. That's the next slide. This is a huge myth, is that it's going to automatically get audited immediately. So, you know, we as tax professionals, almost everybody except for 2 or 3 people raise their hand that they're tax pros in here. We have a professional duty to not play the lottery game on audit. We can't do it. We have to just do a good darn job every time. But this is a factor in our clients' thinking. So typically on a timely filed return, it's about a 2% chance of audit, and that's with any return. We've seen zero evidence that there is increased risk of audit on taking an R&D credit on a timely and originally filed return. On amended returns, the national average is about 4%, so about double that. So, and it really depends what kind of entity you are. There's a lot of factors that go in there. C corporations, much higher scrutiny on the audit. That actually has to go to a special place in Ogden, Utah, flagged for R&D claim for refund. And so that's, C corporations have a different process. You know, if you're an S corporation or partnership, you know, really, you're probably looking at 4% or under for those. But, you know, it's like my granddaddy told me, do it right and sleep tight. So find a consultant that does a good job. You know, look at information that's there. Project tracking is great, but not necessarily needed. So as long as you have some good contemporaneous documentation that backs up what you say. So I would say find a consultant that's going to do a good job, that's going to go through all the rigmarole of not only coming up with the quantitative information, but the qualitative information that backs that up, and making sure that it is a very comprehensive time capsule deliverable, so that if we all hit the lottery and move to Miami tomorrow, that this stands on its own 2 legs, that the accounting department that we leave behind there are able to pick up the pieces, and this justifies what we did, why we did it, and how we did it. Does that answer your question? Do you have any more questions on that? Okay. Yes. I'm sorry. Okay, so she asked, what are the general qualifications, tax qualifications? Do you mean like type of company or? That's a great question. So she asked what type of expenses qualify and type of company. So really, before we go through that example, every single industry has had opportunity to take advantage of the R&D tax credit. So, I mean, it could be architecture, engineering, construction, manufacturing, software, of course, high-tech, biotech. We've even got agricultural clients, lighting clients, industrial clients, you name it. So really it's a matter of asking, you're going to your client, what are you doing? And then, so really, are you asking also the definition of R&D? So you do have to pass a 4-part test. It does have to be technical in nature. It does have to pass a permitted purpose test. So we have to be doing something new or improved as it relates to some kind of product or process, improving reliability, quality, something like that. And there also has to be process of experimentation and some kind of technical uncertainty. So those really go hand in glove. So it has to be, think about Apple. They know how to make iPhones. So making the next iPhone after iPhone 10. They've made a lot of iPhones, but getting that next phone, that new iteration, their engineers are more than capable, but they do have an objective technical uncertainty on the best and most appropriate way to build that, and they're going to have to experiment to get there. So that's a good example. And then types of things that we look at: wages, supplies, and contract research. Wages are almost typically, in almost every case, the largest driver of qualifying research expenses, and roughly about 6.5 cents on the dollar at the federal level can be taken for the R&D tax credit. And states also have, there's about 40 plus states that have some kind of R&D tax credit program as well, that some of them mirror the federal, some of them are very different, and you actually have to apply and get certified by the state. Hawaii is one such credit. And we've got a little video that we're going to walk through on this. So here is your average taxpayer. Like I said, over 50% of the taxpayers that I come across that do qualify for R&D are not taking it. And it's because they don't know about it, or they're believing one of the myths that we talked about in the gray box area. So here's this guy, and if we can just stop just for a minute. Oops. Or we'll just go. We'll do it live. So here's this taxpayer. They're paying a lot more in taxes than they should be, right? That's putting them at a competitive disadvantage. So instead of hiring more qualified folks, they're paying a lot more in taxes, and a lot of times it's upward of 5% difference on the effective tax rate, depending on the types of companies, as published in 10Ks routinely. So the R&D tax credit, it is the most powerful tax incentive out there, by and large, definitely the most powerful. And certainly with the tax changes, the reduced expenses in other areas, R&D is the last man standing. And so it's really something to take a look at. And that's a great question on what type of expenses. The largest driver of expenses is going to be wages. And so really, what this is showing here, here's a taxpayer, here's the CEO, the CFO, and the CPA. That's you guys, leading them to the promised land of the R&D tax credit. As we're looking here, at the little scroll right there is showing an expansive definition of R&D. Remember, so we saw, if you go back to our timeline, the gray side had a very limited definition of R&D. The blue side, that's the last 15 years. As the R&D tax credit has matured, we now have a much more expansive but more defined definition of R&D, and we know how to get it. And so the qualified research, as we mentioned, we're looking at wages, supplies, contract research, and dadgummit. Sorry. I'm having a little bit of technical difficulty here. Okay. All right. So let's see. Let's go ahead and skip ahead here. All right. And so this next example is a small business. It is an architect that's $3.6 million a year. Not huge, but there's going to be sizable credits here, and that's what I want to show you. So here's an architect. A lot of what this architecture firm is doing can qualify. Schematic design, design development, construction documents, all the blue sky thought and development prior to breaking ground on a construction project can qualify. Here in this case, we're looking at primarily wages. Architecture firms usually don't have a lot of supplies or contract research that they can take. And, at the end of the day, we're talking about almost a $70,000 credit. $70,000 here, $70,000 there. Eventually, we're talking about real dollars, right? Joking, obviously, that's a huge amount for a company at $3.6 million a year. And again, here, another example of not only the federal but state tax credit that gets us qualified research expenses of $750,000 in tax credits. Very sizable, right? Very nice. $750,000 in contract, $750,000 in expenses, which leads to a $70,000 tax credit. Any questions on that example or any other industries? Potentially. It looks, we look at, again, it's the four-part test as she asked about. We're looking for, are they solving technical challenges? And so that's the first big question. If they're solving technical challenges, if it's a unique project, then yeah, we want to look at that. So every time they're doing new and improved things. And so I know we're coming close to our time here, I believe. Really, the takeaway I want you to understand, and my goal, and as you go back home and talk to your clients, is ask the question why. What are we doing? Or could you maybe be taking an R&D tax credit? Explore that opportunity. The R&D tax credit is now, it's all grown up, right? He's married with children, stable, predictable, dependable. Certainly something to take a look at. A lot of the myths that you might have heard are invalid now. We do want to keep this conversation going. As you see, the why for tonight includes an olive. We are hosting a reception at our hospitality suite on the Grand Tower here at MGM, room 23341. Would love to have you there. Please keep the conversation going there, and we'll be going till late tonight, so show up whenever after 8:30, and we'd love to have you. Connect with us on LinkedIn. We're always pushing out great articles. Any other questions? Do we have any Q&A or? Okay. Any other? Yes, sir.
In new industries, obviously, it's quite learning new things, new processes, new industries that come out. Have you done any research? There we go. So, in new industries, obviously, R&D credit plays a huge advantage because as the industry is evolving, they're learning new things and developing. Have you had any experience with like the cannabis industry?
That's an interesting question, and obviously there's all kinds of things going on in that industry. However, obviously a big roadblock is the Schedule A classification, and so until that's changed, we're definitely we're open-minded, but is it a legal trade or business for purposes of Section 41 is always a question that we would ask. So Section 41 being the relevant Internal Revenue Code section for research and development tax credits. Any other questions? Industry specific, client specific?
Is there an income level, whether it's payroll tax or other tax, where it does not make sense?
Good question. I would say at a minimum, it's worth taking a look every single time to, we're here to serve our clients. So if they've got, an opportunity, if they're performing qualified research, it's worth it to take a look. So, hey, if anybody wants any additional information, make sure we scan you before you leave. That's a great question, and it's actually more very nuanced. I'd love to talk with you after about that if you have time.
Everyone.
Yes.
Thanks.
Thank you.
It all begins by taking the first step and scheduling your free, no obligation Phase 1 assessment of your potential tax credit or incentives. Drop us a line at 888-773-8356 or reach out by email at info@braynconsulting.com.